Hey everyone, Broadcom reported first quarter fiscal year 2024 results on March 7th. So in this video, I will review those results. I'll also update my buy recommendation for Broadcom stock. Coming into the quarter, I did have Broadcom stock rated as a buy. I've had Broadcom stock rated as a buy for some time now, so you'll want to tune in to see if I'm changing that recommendation or if I'm keeping it the same. So without further ado, let's jump in. Let's take a look at the latest results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Broadcom increased revenue by 34% to 11.961 billion as it consolidated the revenue from its acquisition of VMware. Remember, when a company acquires a company and includes its revenue with its own, it makes revenue higher because it's now adding outside revenue as part of its own. But even excluding the revenue from VMware, revenue for Broadcom would have been up 11% year over year. So still organic demand for its company's services are increasing. Cash flow from operations of 4.815 billion was extremely solid even after capital expenditures of 122 million. That was 4.7 billion. Now, if you compare its cash flow from operations to revenue, you can see it's a very strong CFO to revenue ratio. It's one of the ratios I often look at when I'm evaluating an investment. How much of their sales are they turning into cash flow? That's the name of the game, right? How can you turn sales into cash flow? If you're making sales, but you're losing money on the bottom line, what's the use of that, right? So Broadcom, one of those companies that does an excellent job of turning sales into cash flow from operations, 4.815 billion out of 11.9 billion in the latest quarter. For 2024, their revenue guidance of approximately 50 billion was reiteration. They kept it the same. Investors were hoping they would upgrade their revenue outlook for the year. They didn't. They kept it the same, which would be an increase of 40% from the prior year. I think analysts on Wall Street are expecting better growth from Broadcom. They suspect that Broadcom is being too conservative with this revenue guidance. Nevertheless, it is what it is. For fiscal year 2024, Broadcom is expecting annual adjusted EBITDA of approximately 60% of revenue. Like I mentioned, the company has done an excellent job turning revenue into cash flow, turning revenue into profit. They're not generating empty calories here. They're actually generating cash and profit from their sales. And the words that every investor wants to hear from Broadcom, they gave investors these words. They said, strong demand for our networking products in AI data centers as well as custom AI accelerators from hyperscalers are driving growth in our semiconductor segment. Those are the magic words, right? Every investor wants to hear the company they're investing in has increased demand from AI. AI is the hottest investing trend right now in 2024. It was also the hottest investing trend in 2023. And companies like Broadcom that are benefiting from the rising effectiveness of artificial intelligence and rising demand from artificial intelligence are seeing increased investor interest. So here is Broadcom reiterating that they are seeing a strong benefit from AI and telling investors that there is strong demand for their products. So one of the initiatives the company is undertaking in 2024 is paying down some debt. They started to pay down debt beginning with 3 billion already in 2024, and they expect to continue to pay down debt in fiscal year 2024. That's going to have the effect of decreasing their interest expense, which will boost net profit. So if you thought Broadcom was already profitable, wait till you see how profitable it will be when it pays down debt. That will reduce interest expense, which will increase profit, which the company can then use the increase in profit to pay down even more debt. It can feed that positive virtuous cycle. Now that interest rates are higher, more companies are interested in paying down debt rather than refinancing debt or taking out more debt because the cost of capital increased, right? Capital is not cheap anymore, and so companies are less interested in carrying those higher debt balances. So one of the downsides from Broadcom's latest quarter was a massive decrease in net profit due to the pains of digesting VMware. An acquisition is always difficult to digest and it's not smooth, and those expenses hurt the company. First quarter net income of 1.325 billion was down from 3.774 billion in the same quarter last year. Most of these were non-cash expenses, write-downs and such to account for the acquisition, and won't affect the company's or didn't affect its cash flow. As you could see, its cash flow from operations increased by 779 million to 4.815 billion. Free cash flow also increased by 760 million to 4.693 billion. Overall, excellent quarter from Broadcom. One of the disappointments was the net income decrease. That's to be expected when a company makes a big acquisition like Broadcom has done. Longer term, however, I think investors can be reasonably confident that Broadcom's acquisition of VMware will be positive for the company's profitability longer term. Broadcom has made several large acquisitions in the past and has done a good job digesting them, incorporating them, bringing them as part of the Broadcom business overall. Still, the stock price fell 6% on the day after the company announced its earnings, partly, I think, because of the lack of an upgrade in the annual revenue guidance and profitability outlook. Also, the net profit decrease could have been worse than what investors were expecting from Broadcom, and the stock price had already been so much higher than where it was to begin. If you look back in the last month, Broadcom stock is still up 4.85%. If we go back 3 months, Broadcom stock is up 42.91%. So the enthusiasm from investors may have gotten a little bit ahead of itself, and now since the quarter wasn't miraculous, the stock price came back down, right? It was like investors have been expecting these outperformance to continue from any company related to AI because Nvidia had been outperforming so significantly and several other AI companies had been outperforming. Investors just expected all companies related to AI to just outperform expectations, which wasn't the case here with Broadcom. Still, after the earnings came out and after the stock price decreased, Broadcom's trading at a forward price to earnings of 23.55, which is not too expensive. I think it's a fair value for Broadcom stock given its excellent prospects, given its solid profitability. I could show you its operating profit margin over the last decade. Look at how it's soared nicely higher from around 20% in 2015 up to 45.93% in the latest trailing 12-month period. And so, given its prospects in AI and an excellent profit margin, excellent cash flow generating capability, I think a forward PE of 23.55 is a fair price to pay. And so, I'm reiterating my buy recommendation and keeping Broadcom stock rated as a buy following these latest quarterly results. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.